The Rebel Capitalist Show.
How was your trip to El Salvador? Well, let's talk about that for a moment because most people know what's going on down there. If not, maybe you can just give a quick
Yeah.
summary. And
So what's
then,
happening in El Salvador is part of my thesis into what happens in the future. I believe that we'll see the end of the giant nation state, and we'll start to see a lot smaller states pop up.
yeah,
And El Salvador is a good example of what's happening. So, and also I'm in Puerto Rico right now. And Puerto Rico is also a good example of that. And so I believe kind of going back to medieval times, when the troops were moving around, there was these march zones in countries, and it was where countries overlapped, and they had these march zones, and people in those areas could decide which laws they wanted to abide by based off of what government or what kingdom they're from, even though they are in one geographic area. And so I believe we're seeing a return of that, where the same people, but in the same geographic area, can abide by two different sets of laws. So in Puerto Rico, for example, I'm here on an Act 60. My entire legal structure, tax structure is different than most people here, even though we're in the same geographic area. And I believe we'll continue to see that. El Salvador is another good example of that, where we'll have this increased competition. So El Salvador has said, hey, we're going to have a new medium of exchange. We're going to allow Bitcoin to be a medium of exchange. And obviously I'm a big Bitcoiner. What happens, I believe, is once you start kind of going down the Bitcoin rabbit hole, as we say, you start to look at the world differently. You start to have a more, I guess, freedom mindset, a longer time preference. And I think the president of El Salvador has been bitten by the Bitcoin bug, or he's just listening to other Bitcoin proponents, because he decided to make it legal tender. We know that was in September 7th. Since that time, he rolled out a Bitcoin wallet and gave $30 of Bitcoin out to everybody. That's since doubled since that happened. But what's happened since then is what's getting, I think, even more interesting. So now, as of a few weeks ago, he listened to the people in Bitcoin Plus, I think his freedom mindset, and he said, no more mandates, no more testing, no more requirements. If you want the medicine, great, take it. We offer it to you for free. 70% of the people have taken it. That's cool. If you don't want it, no big deal. We're not testing anybody. We're not forcing anybody. And in addition, he just released what's called Bitcoin City, where he's having basically said no income taxes, no property taxes, no cap gains taxes. And he said, everybody come and make as much money as you want.
Is that in a specific area or the entire country?
Well, it's in this Bitcoin City, which is a specific area.
So it's kind of like a free trade zone.
A free trade zone. So back to my thesis, which is the same people living in the same geographic region could be under two different jurisdictions or two different types of laws, if you will. And so free trade zones are exactly perfect analogies for that, or examples of that. And so basically he's created this area, said, everybody come, and it creates this competition loop. And then one other thing that he's done that's amazing is he's launched this Bitcoin bond. So he has a $1 billion bond, which the El Salvador bonds, they go at about 13.5% right now. He's only given it at 6.5%. He's offering to take half of that bond, 500 billion, and use it to build out Bitcoin mining along the volcano.
500 million, yeah.
Which we can talk about. And then the other 500 is going to go to building out the infrastructure of the city. What they're also doing is they're going to have a 5-year holding period on the bond, and then they'll start to sell some of the Bitcoin in order to pay additional yield on the bond. And the way they've mapped it out, which I think is a little bit aggressive, but they think the bond could end up paying about 150% when it's fully paid out. And I think this is going to be a massive success. The reason why I say that is Michael Saylor from MicroStrategy, he famously last year put their entire treasury, $500 million, into Bitcoin. Since then, he went on to raise, I think, 3 rounds of debt to buy Bitcoin. Each one of them was oversubscribed. He raised $1.5 billion for that. In the last 2 months, we've seen, I think, 6 different publicly traded Bitcoin mining companies raise debt to buy Bitcoin and Bitcoin mining equipment. And so we've seen 6 or 7 examples of oversubscription, of massive success. I think this $1 billion is going to get taken very quickly. But what happens when a nation state can raise $1 billion in the private market and doesn't need to rely on the IMF?
Yeah. How do you see interest rates increasing playing into that?
Well, interest rates playing in interest rates in what?
Basically,
in what
the price of Bitcoin, because the price of Bitcoin is what we're talking about with Saylor and what we're talking about with this gentleman in El Salvador. So as an example, if interest rates go to 20%, then there's going to be some risk assets are going to struggle. And also going back to the Eurodollar futures curve, if we do have a stock market crash, then people are going to sell anything they can sell, so because they need the liquidity. Usually that's gold in the short term if we go back to the GFC. But now a lot more of those balance sheets with those hedge funds that need liquidity have Bitcoin instead of gold.
Yeah.
So is there a risk there to the price if interest rates increase and or we see lower economic activity globally, a recession, maybe a stock market crash?
Yeah. So first of all, rates are coming down. So they're paying 13.5% now, and now they're going to pay 6.5% on the bond. So rates are actually coming down, I think, based off the Bitcoin bond. But back to the bigger question, as far as it being a risk-off asset and selling off like gold typically would, it hasn't been around long enough to really know. But I like to look at what happened to gold in 2008. So the stock market dropped about almost 60%. Gold dropped about 25%. Yep. But the gold reclaimed its previous high in about 7 months. And then went on to go from a low of 680 to almost 2000, whereas the stock market took 7 years to recapture its all-time high. And then we can look at March 2020, same thing, gold dipped, but this time we had Bitcoin. Bitcoin obviously took a massive dip as well, about a 50% drop. But without any circuit breakers, without a plunge protection team, it managed to come back and again, shoot to new crazy all-time highs. So it was about, I forget now, $6,000, $7,000 dropped down to about $3,500. And then of course went on to $68,000. So just like gold did in 2008, just like we saw in March 2020, I would expect probably the same thing to happen because it's not so much about the crash. It's the government's response to the crash.
Yeah.
If the markets drop 20%, which a lot of people think, or even bigger, 60, 80%, I mean, we'll see money printing probably at a level that we've never seen before. And so there's initial knee-jerk reaction. I think trying to trade that dip would be very difficult. And then I would imagine it would just take off to new all-time highs.
Yeah, that makes a lot of sense.